Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, we got to see a perfect bounce from 1925 yesterday after NFP. Gold made a high of almost 1947 and ultimately closed at 1942. So this is the 1 hour chart of gold in front of us. So we also discussed about the falling wedge pattern in our previous video. So more or less we can consider that our levels work perfectly. You can see dollar slice after slowing US jobs growth in July. Yes, after NFP market gave a mix. Actually the data was mixed. As a result, dollar started falling and dollar made a low, or DXY made a low of 101.73 and it tried to recover, ultimately closed at 102. This is the 4 hour chart of DXY in front of us, and you can see that DXY took support around 102 level we have been discussing about. So market opening will be very important, because after a market opening we will get the answer whether the sellers are still dominating the market, or market will be, or DXY will be going for some recovery. As we have CPI on Thursday, there's a high chance the market will remain choppy. Market will remain sideways for the next 2 to 3 days. Right after the market opening, observe the volatility of the market. If the volatility of the market remains like a typical Monday market, then dollar should get support around 101.60 to 101.50. This is the first support, and the second support is around 101.20. You can see here around 101.6050 we have previous support, as well as FIBO 38.2% retracement level. So this is our first support, and at 101.20 we have FIBO 50% retracement level. Along with that we also have the 100 moving average. So these are the two support levels on the chart of DXY. If the volatility of the market remains normal, we can definitely expect dollar to take support around these areas. And if you're wondering about resistance, then obviously the previous high will be the resistance, and in case market surprises us, okay, then 103 to 103.25 should be the resistance before CPI. 103 to 103.25 till CPI. But overall we can expect the market to remain sideways or choppy till CPI. Let's wait and watch how the DXY reacts. Now let's look at the chart of gold here. So if the market remains choppy sideways till CPI, then obviously gold will also remain like that, or gold will also show a similar move. The support of 1925 is still very much valid. In case of a big drop in the market, you can still expect 1925 to provide support to the market. So the best support is still around 1925. Okay. In our previous video, we also discussed about support levels around 1912 to 1914, and we also discussed about 1902 to 1905. Those levels are still very much valid. But as of now, market is trying to go for showing us trend reversal signs. Market is trying to go up. So these levels, these two support levels are not required as of now, because the current market price is far away from these two levels. So this should be our focus right now. 1925 is the ultimate support, and if we move to lower time frame, 15 minutes time frame, then you can see that we also have some support around 1937 as well. So on Monday, as I said, the market opening will be very important. So if market is volatile, then 1937 as support will not work. Then you need to focus on 1925 only. But if you see that the volatility of the market is not very high and it acts like a typical Monday market, then you can expect 1937, 1935, 36, this level to provide support to the market. Once you'll see the market is showing price rejection from below, you can hit the buy button. You can expect around 30 pips. 30 pips on a Monday market, especially during the first half, is quite good enough. But yes, if market breaks 1935 level, there is a possibility that market will be heading towards 1930, 1929 again. In that case, you can look for a sell as well. So as always, volatility of the market will play a dominant role. Volatility will decide which level will work. So my dear friends, your observation will be very important. So 1937 is a minor support in a market. If the volatility is low, you can expect a bounce. If the volatility is high, your eyes should be on 1925 only. Risky sell below 1935 if you want. And we have minor resistances around 1947 and we have 1950. These are the two next or immediate resistances on the chart of gold. On Monday, if you see right after the market opening, market is going up and the size of the candles are very small. It means the volume is not very high, and in that case you can expect 1947 to act as the next resistance for the market. If you see that just like the previous times, market is showing price rejection from above, you can obviously go for a sell position. But in case you see that market is standing at 1947 with a big green candle, obviously you need to use your common sense. Instead of taking a sell, wait and watch. If market breaks 1947, you should look for a sell around 1950. And in this market condition right now, I don't think so market will be going for a breakout above 1950 right now. 1950 seems to be the resistance for the market. If we look at the chart, then technically 1955 is the resistance. 1955 is the resistance technically. But if we look at the options data here, where is 1950? Yes, there it goes. You can see that around at 1950, not around, at 1950, we have new 429 contracts. So as a result, 1950 is a strong resistance for the market. And if there is no news in the market, then obviously 1950 will create some trouble as resistance. Okay. So if market reverses, you can look for a sell. Okay. And in case market comes up with big volume and market breaks 1950, then you can see that we do not have any immediate resistance. If market breaks 1955 level, then you can consider that 1975 1980 is the next resistance. And so swing traders, if you are looking for a position right now, then wait for the market to break 1955 level. Once you'll see that market is flying, market is going above 1955 level, you can look for a buy position and you can set your target around 1975 to 1980. But right now, day traders, you can look for sell position around the resistance. So right now, swing traders, okay, you just take a pause, because this time, okay, day traders, you need to come forward and take position, because in this market, okay, in this market situation, gold is standing at 1942, but we can see from the contracts data that around 1950 we have a strong resistance. So it is better to take a sell if market reverses at 1950. 1950, 1955, these are the two resistances. If market goes up and reverse, we can look for a sell. But if market breaks 1955 by Tuesday, Wednesday, Thursday, then you can consider that gold will be heading towards 1975-80. So day traders, you need to trade from level to level right now. Swing traders, you can take a break. You need to come again after market. Once you'll see market trading above 1955. So let's wait and watch. Again, I'm repeating, okay, you need to trade from level to level only right now, and volatility of the market will play a dominant role. Okay, so that's all from my side, my friends. Please follow proper risk management. This is my analysis. I can be wrong as well. I'm also a trader like you. So do not gamble with your hard-earned money. Do not gamble with your capital. Bye bye. Take care. Enjoy the weekend. Have fun. See ya on Monday.